All right, we are connected for the Thursday edition of the RTD News. And as always, looking forward to connecting, sharing my 2 cents on a variety of subject matter. And yeah, it looks like a central bank divided against itself can't stand or will be forced to cut. So we're going to talk about the FOMC meeting yesterday, current silver price, as well as some more interesting developments in silver. And so it looks like an interesting article that came out from Economic India in reference to the possible stash that JP Morgan is sitting on top of some developments in China with what they plan on doing with silver at the beginning of 2026, which spells more fireworks. And so it's going to be very interesting because it looks like the cat's out the bag and suppressing silver is probably a thing of the past. We're going to talk about that and a lot more. But anyway, welcome. For those who are checking in with me, thank you for blessing me with your presence as always. It's always great to connect with like-minded people. And if you have not as of yet, hit that thumbs up, check mark wherever you're watching from. Show some love for the channel. I appreciate you for blessing me with your presence and time. And I'm going to thumb through. I got 7, 8 tabs open, all relevant information, I think, that paints a very interesting picture that will help us filter through the noise and see what sticks and what doesn't. And of course, if it isn't physical, you might want to second think some things. So it's going to be interesting, man. But before I move forward, let me make sure everything is flowing smoothly. Can you guys hear me? Hit that thumbs up. Let me get a mic check real quick to make sure I'm not streaming to myself. And then we'll jump into some things here and have some fun with it. And I actually want to pick up where I left off at the other day, or was it yesterday? The other day, in reference to a question I put out there for the viewers. And the question was centered around, after the Federal Reserve meeting, what do you anticipate the price of silver being? And so let me just jump to that page here. So during that live stream, as you can see, we were at $60.48. And so just thumbing through some of the comments, I saw a price figure that was, I guess, in the ballpark. So it looks like still climbing. He said, my guess is 62.55 on the Crimex. And so here we are today. Let's see where we stand. We are at 62.82 on the Crimex. And so look at gold, though. Look at gold making some moves. And so clearly, the restructuring of our monetary system is underway, and gold and silver is at the heart of it. And it doesn't look like there's much that the Western Hemisphere can do, or do they even want to, is the question. And my suspicion is that they, meaning the bullion banks, and in particular JP Morgan, is well positioned to benefit no matter what. And that leads me right into the very first article, my good people. Here is something that I'm sure you may not have seen, but if you did, you're going to get a different take on it. So this, as I mentioned, is from the Economic Times, and it was written by a, Pushu Shukla at the Global Desk. And so here's a synopsis of what it says, but I want to just thumb through a little bit because JP Morgan, Jamie Dimon, I would say at the center point of the banking cabal, he's been a long time bankster and clearly aware and awake to what's happening, and also probably got some skin in the game and sit at the table of the decisions that's being made on the global side of things. And so here, just to give you an idea as to what's going on and how, even though it appears that silver is getting away, but it's probably being allowed to get away because they, meaning him and his entity and all those that are in on this narrative, they're already positioned. So in the end, they're going to benefit just as well. And so it says JP Morgan is going long on silver and making history. The bank holds over 750 million ounces of physical silver, the largest stockpile in the world. And so, once again, the largest stockpile in the world, I will probably question that, but this is what we're being told. And so, I guess, according to public record and or audible sources, this is the information we're being given. But just the idea of 750 million ounces of physical, that's something to really consider, because you would have to ask yourself a question, or I would ask myself a question. Why would our government allow a too big to fail bank gain such a large position that puts them in a position to be able to control and corner the market in reference to the Western Hemisphere, when the Hunt brothers tried to pull off something like that 40 years ago? It was broken up. And then Warren Buffett attempted to do something like that as well, what was about 20 years ago, and his was broken up somehow, some way. But then Jamie Dimon and his crew, according to what we are being told here, they're allowed to do it, and our government's not breaking it up. Just stuff to make you wonder, my people. Who's in on this? They're all in on it together. Anyway, just keep it going. Just a couple more things here, and I'll get through a lot of other things that I think is relevant to the subject matter, because as the price goes up, they're in good position to benefit from it as well. But then you got to ask yourself, if this particular bank here, amongst all the other bullion banks that might have physical, are going to benefit. We know the Eastern Hemisphere is in charge of all this. They're going to benefit. So the question is, for the average Joe and Jane, those who don't have gold and silver in the form of a wealth preservation tool as well as an investment side of things, what are they going to be left with? And that's where we get an idea that those who don't have will be forced to accept whatever is being offered or given, and we know what that's going to be. After all this unraveling, universal basic income, some type of government stimulus program or something like that, where those that are not awake and aware will be more than happy and willing to accept it, because that's going to be one of the primary options that they'll have. Okay, so it says here, in just 6 weeks, it added 21 million ounces. That's a staggering move in a market already under pressure. So with all this clamoring to get physical, JP Morgan was able to add 21 million ounces. And I would assume, given the supply issues that we're hearing about and witnessing that's being driven from, vaults being drained, if they were able to secure 21 million, it's good to say they probably wanted more, but they had to share it with or work out some type of agreement or negotiations with the Shanghai Futures Exchange and all the things we're hearing about what's happening out east, and how a lot of the Western Wall Street markets are literally moving that direction. So, it could be that they are somehow working together to try to make sure that everyone in that level is positioned comfortably for whatever it is they got planned in the future. But it says here, between June and October, JP Morgan reportedly sold off its entire 200 million ounce paper short position. It says this freed cash to acquire physical silver, leaving the bank long in both physical and paper for the first time ever. Experts say this is a rare and powerful market position. And so, it says the move coincided with the U.S. Mint announcing a shortage of silver ounces. Silver coin supply, physical supply is tightening while demand is rising. JP Morgan is holding real silver, not paper contracts. This is a key difference from the Hunt brothers' attempt to corner markets in 1980. Back then, reliance on paper contracts led to intervention and collapse. JP Morgan's approach reduces risk of regulatory disruption. And then I'll end it with this here. It says, if history is any guide, silver could move sharply upward, adjusted for inflation. Silver's 1980 peak would be over $600 per ounce a day. Nobody can predict exact prices, but the structural setup favors a major squeeze. Industrial demand is rising, mine supply is falling, and institutional accumulation is accelerating. And that, my friends, is something right there to consider. And so where does that leave us? That leaves us looking at gold and silver in tandem being pushed up. Gold and silver, all of my adulthood life, for the most part, or in a particular last decade of me rethinking the dollar, has been deliberately pressed down with the futures contracts, deliberately, while the technocratic powers that be were slowly but surely trying to plan, strategize, and build out the digital transformation that's underway right now. And so here we are today one of the things that I would probably consider is the fact that they're letting gold and silver move, where it's becoming a very attractive opportunity for a lot of people who know, as I mentioned, majority of people don't know. So, they're going to be able to accomplish their objectives at the end of the day, because mainstream media is not talking about this. But I did see some stuff talking about Bitcoin and the fact that the FOMC cut and announced they're going to cut on the spigot, and Bitcoin dropped. But they mentioned that, but they didn't mention silver and gold, and in particular silver. And so that means a lot of people won't find out what's going on. Okay, I know that's going to be a part of the plan. But my point is, if they move the cap and now it's being pushed up, that means that they're probably already in position and ready for what comes next. And that's where I'm like, okay, what comes next? I don't know. We're going to find out. But I got a good sense of what's going to come next. And in the days ahead, I'll share more of my 2 cents on that, and how the merger of the public and private partnership seems to be advancing quite well. And so that's something that will put a damper in everyone's plans as we get closer to 2030. But I'll save that for another rant. But what is promising is how you look at silver and gold in tandem in 2 different ways. That's 4. 2 different ways. Okay, so let me give it to you straight. As a result of silver moving more in a faster pace in nominal terms compared to gold, what we're witnessing is the gold to silver ratio drop substantially, to where it is starting to now appear that we're going to head towards some type of equilibrium. And when I say equilibrium, I'm referring to the actual, and it's too soon to tell, I'm jumping the gun, but why not take it there? The out of the ground ratio of 10 to 1, 7 to 1, 15, wherever you're digging out the ground at, whoever miner you listen to, whether it's Keith Neumeyer or Rick Rule or any of those individuals that actually got hands in the ground, we're dropping towards that point. And so literally it's revealing that silver is becoming of strategic, national, global importance for a variety of factors, well beyond gold. Because gold has always been just a, sit in your vaults, secure your nation state, whereas in silver is now being thrust to the front of like the people's money of like, you need to secure and protect yourself personally. And this has nothing to do with our government, because once again, this administration won't talk about that. But I got some stuff I'll share with you in a minute as well that lets you know what he's focused on. But just at the current moment, we dropped below 70, and it's 67 right now and dropping. And so literally from, you go back to April 22nd of this year, it was 105 to now 67. So do the math. So people who would have acquired silver then, at this current moment, you can see how much more profitable. I mean, I want to say, I don't want to use that term, but you see how much to your advantage it would have been had you been able to secure some more silver then, which would have probably meant, unloading some gold. And that's when gold was rallying. And that's why it's so skewed, because gold was rallying and silver wasn't moving. But here we are today, 67. So my question to you, just put a little something out there, and I would love to get your thoughts in the chat. Based upon the current trend, based upon the current movement and the velocity of this movement, do you see the gold to silver ratio before the end of this year getting closer to 60 or below 60? Because once again, if you look at the speed, so literally if we would go back here, let me zoom in so you can see what I see. If we were to go back, let's just go back to October 27th when it was 84, and the rate at which the ratio has been coming down to the point where on November 21st it was 80, and then literally, what's that, 3 weeks later, it goes from 80 to 67. So that right there, the rate at which this dropped and the speed and the timing of this, you don't see that nowhere on here going back to early this year. You do see it a little bit when it went from 97 or 98 down to 90. That was a 10, about 10 or so drop in the ratio there. So once again, these large drops to me says a lot. And then you look at, as I'm looking right now, U.S. oil price is $57. So literally, silver, in a nominal sense, is of higher value than oil. I can't really think of the last time I paid attention to it like this, where you see oil price dropping as well. So you go back to June of this year, it was at $76 a barrel. And then now it's at $57 a barrel. And let's just go zoom out a little bit, because energy makes the world go round. And you go back to June of 22, it was at $123 a barrel. And so literally more than half. And that's just something that we haven't witnessed. So it plays into the whole idea of this administration loving the idea of referring to gasoline prices just in the narrative of fighting inflation. They'll say, look at the prices at the pump, as if like that's the only way you can determine the affordability issue. But here in January 2009, it looks like oil on the second day of January, the beginning of the year, 2009, oil got down to $34 a barrel. And then, of course, we know the anomaly where it was damn near free, because where the tankers weren't moving, nobody was willing to accept oil. It got down to zero. So energy, silver, gold, commodities, real world necessities for life, all priced in U.S. dollars, are probably eventually got to go up, because buying $40 billion in T-bills every day, or not every day, but every month, if not probably sooner than that as time goes forward, is going to equal a lot of currency floating around looking to find some place to park. And everything real that's scarce in nature and important to humanity will also reflect that in price. Okay, but I don't want to stop there, because if JP Morgan is sitting on a large stash, you got to ask yourself a question. What is going to happen with China? Because they're not going to sit by and just let the U.S. continue to corner markets. And so here's an interesting article here. It says, China export controls tighten global silver supply. And this is ad hoc news. Looks like a German news source. And so China definitely has plans for silver and gold, on top of India, and I'm sure Russia is also involved. So everybody is trying to secure a position in what is being looked at as the most strategic metal known to man, for all the various properties that it has been given to us by the good Lord. And so I'll give you a little snippet here. It says, a potent combination of monetary policy anticipation and fundamental supply shifts is creating a volatile environment for silver. As investors await a key interest rate decision, so this was the other day, China is implementing policy changes with the potential to structurally constrain the worldwide flow of industrial precious metals for years to come. It says silver surged to a fresh 52-week high today, meaning yesterday, the day before, extending a remarkable rally that has seen the metal appreciate 23% over the last 30 days. This upward momentum is largely attributed to growing market concerns over an impending supply squeeze orchestrated by Beijing. And so here, this article, a German news source, is telling us that the current supply issue is being orchestrated by Beijing. It says here, China's Chinese Minister Commerce has placed silver exports under a stringent state trading management system for the 26-27 period. While not an outright ban, this policy represents a significant market intervention. The new framework mandates that exports licenses will be granted almost exclusively to state-certified enterprises, drastically reducing the number of eligible sellers. So literally, for the sake of controlling outflow of silver from the country, they're going to authorize certain people to be able to deal with silver when it comes to production of it, use of it, stuff like that, and curtailing who it goes to. So therefore, it's going to impact the price more, because it's good to say silver won't flow freely to places where it has in the past. So those people who import those goods and services, if they get a restricted supply, they're going to have to look for buyers elsewhere. Therefore, they may end up start doing things on their own, trying to get their own silver stockpiles, whether it's nation states, whether it's companies, whoever's on the receiving end from things coming out of China is going to be restricted or dialed back, and or it's going to cost them more because of the demand for silver. So think about this. When it comes to solar panels, if I know that as a solar panel manufacturer, I got to produce, 100,000 units, whatever size solar panels, and I have orders going out to 2 years from now. And I know that I need silver to make these solar panels. And my own reserve of silver for making them in-house within my company is subject to my supplier, which is in this case here, Beijing, China, whatever. And if they're selling it and or the futures price of that is way higher or going to be of concern, that means I got to now buy a lot more sooner so I can supply my needs for future outputs. So therefore, there's going to be a continual upward pressure on price, because if I know I got to deliver stuff next year, and I know, but next year, if I wait till next year to try to get silver, it's going to be $125 or $150 an ounce. I won't be able to affordably manufacture my solar panels. I need to get triple or double the supply of silver today. And that's going to factor in to how China will definitely put a major squeeze, to where when I went back earlier, for those who might just be coming in, I talked about how JP Morgan has already established themselves, according to what we know, as having the largest silver stash. And they're not, JP Morgan's not holding silver for solar panels. They're not holding the silver for the industrial needs. They're holding it for the monetary properties and an alternative hedge for bank preservation. Because if they have 750 ounces of physical silver, as it says here, so this is a synopsis. It says, JP Morgan is making a historic silver bet. The bank now holds over 750 million ounces of physical silver, adding 21 million ounces in 6 weeks. It exited its 200 million ounce paper short, leaving 0 short contracts for the first time. And so it says physical silver supply is tightening as the U.S. Mint reports coin shortages. COMEX open interest is 244% of registered silver. So literally, the amount of claims that the COMEX has in relative terms to what they are supposed to have in the vaults is 244% plus. It's like our national debt is like way, way, way more than what we can ever pay. That's where the COMEX is at. They are responsible for or they got contracts out stating that they can deliver on way more than what they actually have, to the tunes of 244%. It says lease rates now are 30%. It's costing more now to be able to lease, and 169 million ounces moved to non-deliverable vaults, meaning 169 million ounces within their possession is being taken offline. They're going to put that in the vault, and no one's touching that. I wonder why. Who knows? But my point is, at the end of the year now, silver is becoming literally a strategic gameplay, where the article said it's been fueled by Beijing, and literally it is a direct, I would probably say, if Donald Trump wanted to, he could say that this action in silver alone is a strategic attack on U.S. national interest. Because with Beijing bringing all this to the forefront, they can say that they're trying to hinder, American growth, American stability, because our car manufacturers, are threatened, and, our industries are threatened, whatever. But when it comes to silver, out of this administration, is crickets. Because the last thing I know the bankers would want, as well as the technocrats that are building out the digital infrastructure, the last thing they would want is the president to come out bringing attention to the price action in silver. It is not possible. They will not allow that. The handlers of this administration will not allow that. And so you stick to the script. You put pressure on Jerome Powell. You call him incompetent. You say he's not cutting large or fast enough. And then you call for the need to stimulate the economy more with more cuts and the like. And so to let you know, let me see. Give me a second here. I got all types of things. Let me share. Did I bookmark it? Okay, so yeah. Here is, let me share with you. I always have to, because you have to filter through the noise. You can never take anything at face value. Let me share with you some remarks yesterday from this administration. And I want to highlight one thing in particular that is the focus. Give me a second. Let me grab it so you can hear what I hear. And I will play this and let. So before I do it, this is from this guy here. I follow his posts. He got 1.6 million, and yeah, I'm a little concerned. I'll put it like that. But it says President Trump just nuked the Federal Reserve for being petrified into action. Why doesn't he just abolish it? Okay, he's not going to abolish what he needs to accomplish what needs to be done. But listen to this.
Much, much bigger, much, much better. And driving it up and have it keep going. The market should go up, and we should keep driving it up and have it keep going up, and let it be much, much bigger, much, much better. And, growth doesn't mean inflation. They're always afraid that, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather small number that could have been doubled, at least doubled. And that's the other thing. I think the rates for the United States are always the lowest in the world, because without us, there is no world. Without this economy, there's no world. You can go to some of these wonderful countries that you think are so great. Well, one of the reasons they're great is because we allow.
All right. But he started off by saying markets should be up, referring to the cuts. If he had cut harder, faster, the markets would be up. Our market should be up. Literally, asset price inflation through the stock market, that illusion of the idea of stocks. And it's going to happen. It's going to come in 2026. I mean, that's a part of the MAGA wealth effect and a Trump pump, but it's the fact that his focus is on the markets going up, 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 up. Never mind the value and of the purchasing power of the currency that was being weaponized to drive it up, and how it's going to impact the average Joe and Jane. But what goes up, must come down. And that's the part where, it's all about narrative. It's all about what drives the headlines, what's the focus. And once again, but I didn't hear nothing about, gold, silver, which you can't. So that's just how things go. But let me give you a couple other things here. And let me check into the chat real quick. Let me see what's going on here. Feel free to share thoughts, ideas, etc. And let me see. I'm buying silver at $3 under spot. People, I have to sit around and wait for you to go up. You understand? Yeah, and so I saw a comment from someone somewhere about our people who are awake and aware, who've been in a space, paying attention, know what's happening, know the timing of everything. Are you still as active in your acquisition or redemption of fiat for metals as you were prior to the increased price action? And so are you still stacking heavily, as I'm saying? Or are you waiting for pullbacks or what? Or, of course, everybody's different. But on average, I would be curious to find out. I might do a survey or something to see what people are thinking, what people are doing. And or have you shifted your attention to other opportunities? Because, there's the miners and there's all types of other things out there that people can take advantage of. So it says Trump is an objective Satanist and was installed to destroy what's left of America. Yeah, some people out there are not Trump fans. Yeah, that's where I'm like, I personally, other than just giving commentary on interesting developments in present day and time, any administration, all the way back to when I started, it was Obama. I narrated every day. They would say something, I disagree with it, I would share my 2 cents on it, just like I would anybody. I don't hold nothing back, because one of the gifts of having free speech is the ability to disagree. And when you're being lied to intentionally, because politicians all run on propaganda, then it makes it easy. So I don't look at it as like I'm stabbing him in the back, but I'm not a fan of his, just like I wasn't a fan of Biden's either. Like, I know none of these guys are really operating in the best interest of my children and my my unborn grandchildren. So anyway, that's just me. But okay. So what is going on? Let's see here. Here's some developments. Like, once again, I don't think people really, want this. Did people vote for them to put pressure on Venezuela and to say narco drugs and all the stuff that I heard something. I watched a video. 87 people have been assassinated, taken out in them boats, going back and forth. And so, literally, are they casualties of war? Are they, were they convicted, tried, and sentenced when the bombs dropped on the boat? So these are just things where I'm like, and the fact that you seize a sanctioned oil tanker, like, so who does the sanctioning, and then who gave permission for the seizing? You know what I'm saying? Like, so the U.S. is like, I'm very grateful to be born in the land of the free. But then again, like, when you look at how we handle business, does it surprise you that there are people who want to do us harm? So anyway, I'll be curious to get your thoughts on that. And then also, here's a headline that, Reuters couldn't pass up on. Bitcoin dips below 90,000 as AI worries dent risk appetite. And so, like, you got, an all-time high in silver. These people talking about some computer code. Yeah, you got to love it. And so let me just take a look at the computer code and see where we stand. 89,000. And so over the last day, it pumped. Let me see. This was at right when Jerome Powell was talking. It wanted to pump. Like, literally, like, so here, this is how you know it's been captured and controlled when it comes to price action. When Jerome was talking, it wanted to pump. It got up to 94,000. So from the time Jerome started talking, is about this time frame here, 92. He announced the purchasing of T-bills. They're like, okay, QE. It pumped. So the algos, exchanges, ain't no telling how this actually works nowadays as far as the price discovery mechanism for cryptos. And then Bitcoin I focus on just because I know it's this administration's responsibility to make sure this is the Western Hemisphere primary focus. I know that. I'm sure you know that. And so literally after it pumped, somebody or something decided that, nope, it's not time. And so we're going to sell it off. We're going to dump it. And it got down at the, within that same time frame. But by the end of the night, it got to 89,000. And now it's hovering below 89,000. So for a Bitcoin to be, getting so much adoption, treasury company, building all this stuff around it, and for it not to respond at the announcement of QE, quasi-QE, should be concerning because it just highlights more of the fact that it's been captured and it's controlled, and it will pump when they are ready for it to pump. So if price is not a concern, then make sure you got position. But if price in the long run is going to be a concern, then you got to believe that they're going to do something to it the way that they have gold and silver for the last 50 years. And if you don't think that's the case, then, yeah, shame on you. But you know how this story ends, or at least hopefully you do. All right, let me see what else I got here for you guys. I want to make sure I give you a couple other headlines here if I got anything else. Oh, yeah, something else I want to touch on. Bond yields. And so as I'm looking, let me see here. I don't follow bond yields often, but when I do, I always look at trend lines. And so here we got the 10-year. And over the last week, in particular, around the idea of QT. So you go back here when QT was being thought of or officially stopped, people knew that, okay, they're going to stop reducing or withdrawing liquidity from the system. And at some point, they're going to reverse that and start giving liquidity. And so it started being priced into 10-year, and it got up to 4.2 something as of 2 days ago. And then now it's starting to take a little bit of a dip. And so you have to ask yourself, we know why it went up, because of concern of the markets demanding more yield on the risks that they're going to take when QE comes. And now that QE is announced, in a sense, it's taking a little bit of a dip. It's like, okay, who out here is buying? Could this be some market activity, some shady back deals, some island somewhere being propped up by the Exchange Stabilization Fund to pretend to be a buyer? And so with gold and silver setting all-time highs, what good is it really to hold U.S. liabilities on your balance sheet when you know you're being defaulted on in real time? So with gold and silver continually climbing, how is bond yields dropping? Who's actually deciding to acquire those things are things that you would have to consider. And of course, it's more sophisticated than that. I know hedge funds, insurance companies, everybody and mother are forced to buy those things. But nation states, I don't think, are feeling as happy and comfortable buying that when they're being told that, oh, the Federal Reserve is about to accommodate the markets with an additional $40 billion for starters. And then they're going to pick it up, I'm sure. But these are some things that people should really be aware of, because the spigot is cutting back on. Gold and silver sniffed it out well before now. JP Morgan is already positioned. They're comfortable. Beijing is going to clamp down even more, creating more of a silver squeeze heading into the new year. And this administration is in dire need of more cuts for a healthy economy. Yeah. But once again, this is just my 2 cents, sharing it with you guys. Hopefully you found some value. Hopefully being able to filter through some of the noise here, you'll leave here more in tune than you did when you came in. That's my objective. And if you have, and if you did, hit that thumbs up button real quick. Take a minute, show your support for the channel. Whoever's checking in, whether you're watching a replay or not, let me know with a thumbs up that you appreciated the time and effort put in to gather all this up to deliver it to you guys. That's just a way of letting your boy know that you care. So other than that, people, I got a couple other things I want to touch on, but I'll probably do it in a different live stream if I can. But with that being the case, be blessed, be safe, and I will catch you guys.